Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. This is about zero and negative yields, which is a huge gift to gold and silver investors. This article is written from Seeking Alpha. Link will be in the description. It's extremely detailed. It's an extremely well-written article, and it actually kind of goes over a lot of things happening in the political side, whether it's from Trump, whether it's from the economy. It's so detailed. I think you guys will enjoy this. Make sure you smash that like button. But anyways, let's jump into it. So, gold rallied up to the $1,480 level midweek before retreating on Thursday. The silver market is showing a slight weekly advance of 0.4% to bring the spot prices to $17.12 an ounce. Platinum is unchanged on the week at $895. Palladium is perking up again and is posting 3.4% gain this week to come at $1,772 an ounce. So, this is it's basically almost like a podcast type interview, and it's this guy from Mike Gleason and someone else. Let's find his name real quick. David Morgan and Mike Gleason. They're going over just what's happening in the economy and why precious metals are the perfect answer. So I'm going to read it and try to follow along with me because it is extremely detailed, and you guys, I think, will find some very informational stuff in this. So anyways, coming up to David Morgan and the Morgan Report joins me after another wonderful interview on the state of the metals and the markets. David talks about checking your premises as a metal investor and lays out the case for why it's important, and now more than ever to not lose your nerve despite some lackluster price action. And this is important because a lot of people do, when precious metals start to get in that bearish trend, or there's kind of stagnant, people lose faith extremely quick, and that's because media kind of portrays gold and silver as more of a slowish investment, and it isn't for the day-to-day making money. That's more for stocks, more for cryptocurrency, or if you're into those things. Gold and silver is more of a slower hedge against inflation, where you can preserve your wealth. But anyways, he also discusses the changes underway in our monetary system, changes that everyone needs to take notice of. So don't miss my conversation with our good friend David Morgan, the man they call the Silver Guru, coming up after this week's market update. Precious metals markets attempted to make some progress earlier this week. Most of the actual price progress accrued to the white metals as gold lagged a bit. But gold rallied up to the $1,480 level midweek before retreating on Thursday. As of this Friday recording, gold trades at $1,467 per ounce, down $2 or down 0.1% since last Friday's close. So turning to the white metals, the silver market's showing a slight weekly advance of 0.4% to bring spot prices to around $17.12 an ounce. This article was written about a week ago, so things are slightly different. Platinum is unchanged the week at $895, and finally palladium is perking up again and posting 3.4% gain this week and coming in at $1,770 per ounce. Markets haven't reacted much to the impeachment circus playing out in Capitol Hill. Perhaps investors sense that despite the deep partisan divisions being put out on public display, it's business as usual when it comes to the big fiscal monetary issues, regardless of whether President Donald Trump is impeached. In fact, lawmakers in the White House managed to agree that the stopgap spending on the bill Thursday that averts the government shutdown. Politicians agreed to kick the can down the road until December 20th, when the threat of the shutdown will loom again if President Trump decides to play hardball with the congressional Democrats. Trump signed the current spending bill despite the fact that it contained no new border wall funding or any meaningful spending concessions from Democrats. The bill will expand the already ballooning federal budget deficit. In October, the gap between the government outlays and receipts grew by 34% from the previous year to $134 billion. So, the running budget deficit for the last 12 months rose above $1 trillion mark for the first time in more than 6 years. Few in Washington nor Wall Street seem to notice or take care, or even everyone seems to think the deficits don't matter as long as the Federal Reserve keeps interest rates low and stands ready to buy government bonds in unlimited quantities. So I'm curious on where that's going to be affecting precious metals prices. You know, the FOMC meetings, Federal Reserve cutting interest rates always plays a huge part in influencing precious metals prices for the better or for the worse. Usually for the better, though. Fed Chairman Jerome Powell has expressed concerns over the budget deficit and the unwillingness of elected officials to make responsible fiscal policy decisions. Powell may prefer not to be in the position of papering over rising federal debt, but he is now effectively trapped in that role. So minutes from the Federal Reserve's October meeting were released on Wednesday. Fed officials expressed optimism about the economic outlook and pushed back against the idea of employing negative interest rates in the event of a recession. Interesting. President Trump has expressed support for negative interest rates. Some economists, including former Fed Chair Alan Greenspan, have said negative rates are likely to make their way into the United States. So that's kind of just going over this is kind of going over, just what's happening in the economy, but this article is extremely long, so I'm going to kind of go down and make the highlighted points. So victims of the Chase Metals scheme were apparently led to believe that silver coins they got pressured into buying carried some kind of special collectible value. The truth is the buyers overpaid up to 200% for silver bullion that wasn't special at all. Man, JP Morgan Chase. Mike Gleason is privileged now to welcome back our good friend Dave Morgan, the Morgan Report, and here we go into the interview. So, well, we've had a significant correction in precious metal prices, especially in silver, and I wanted to get your thoughts on that to start out here. To us, it looked like the bullion banks sold futures contracts to a lot of those speculators who got interested in the metals. Then, as often as happens, the speculators got taken out of the woodshed. However, open interest appears to be still rising. This is with the demand of silver rising as well. As people see that precious metals can actually become profitable and they actually have some more benefits, more than just it's shiny, I think people are going to start flooding towards markets, especially as things in the economy aren't getting any better, which I don't see anytime soon. So, he goes on to ask him, what do you think about selling might be over for now? He says, I do not. I think there's probably more so on the head. I mean, it's possible that we get a lift here to do fake out from the longs, but I don't like the structure of the commitment of traders. Silver hit about a 3.5-year high, which was about $19.65, which you guys remember a couple months ago, which I believe was the top of its spot market. And we've had several instances over the last 6, 7, 8 years where the last day of trading was a low pick for the year in the metals. Traditionally, they start moving up, and the end of the year has not been this seasonality of many years now. So I think we're going to drift off lower. It's possible that the bottom is in. I called about a $1,450 bottom on gold, and it's 50% retracement from the $200 move that went from $1,300 to $1,550 when it finally broke that 6-year trading range, and it's done that. But yet, in the looking at the COT, I think we'd probably going to see lower before we see higher. But he does mention that there is a bottom that's starting to form. There's support lines, there's resistance levels. If you check the support lines, it's almost always stayed above it. So it seems like since even with stock market setting record highs, regardless of what's happening, silver and gold is building a foundation beneath its feet. So even when things are coming at it, whether it's the dollar index, whether it's U.S.-China trade negotiations coming to agreements, it's building some stability. And that's extremely good, especially setting itself up for a nice rally. So, obviously, one man, so this is Mike Gleason, he goes on to say, obviously one asked to kind of check their premises after just that long period, especially in silver. Gold, of course, did reach that 6-year high, and silver has never gotten to that point, or we really haven't broken out of that trading range. I'm sure you'd probably be doing all this time, checking your premises on where things are. I mean, is gold and silver still going to be a good place to be over that long run despite all the consultation and the difficulty we've seen over the last few years? He goes on to say, absolutely. I mean, we're facing something that's really never been taken place in monetary history, at least for what we know of recorded history, and we're seeing the demise of the age of the empire. I mean, basically, everything was built off of this system, on money, and money system is actually designed to fail from the start, which is so true. You cannot have infinite interest rates, and what that means is that the exponential function, the compounding interest of over year and year again, they'll go infinity eventually. So we've had adjustments and certainly some very big problems throughout the monetary history. I mean, there's several that we can name. To this point, I mean, I don't think it's ever been one of the breadth of the scope where you can basically, the 7 billion people on the planet, will very few come out unscathed. It's certainly not the end of the world, but there will be an adjustment, and how big and how hard and how long that adjustment is, no one really knows. And this is what I want to talk about for a minute, because the dollar's lost 98% of its purchasing power, and we're trying to get ourselves out of debt by replacing it with more debt. But we've seen third world countries, no fiat currency based systems ever worked. I mean, there's cashless nations. There's these new. It's the digital age, and you've seen third world countries. Their dollars so useless. They carry their money in trash bags. A wallet's only going to carry about 50 cents worth of value because their dollar bills are worth the purchasing power of a couple pennies. So something needs to change, and gold and silver are the only solution. And I say solution because there really is no solution. It's the only alternative. That's a better word for it. It's an alternative because we're too deep in the hole to really fix anything, and no one knows what's going to happen. And he says, we can't go into an infinity interest rates. I mean, the way that we've built upon our system, it has to crash. It has to fail to some extent. But this article keeps going on. It's pretty long. If you guys want to keep reading on, it's extremely important. I definitely think I might break it down and do some other videos out of some of the other topics they mentioned. But this video is already almost 11 minutes long, so I'm going to wrap it up here just for, I don't want you guys to be, watching it for too long. I don't like my videos going past around 12-13 minutes, but I am going to wrap it up here. I hope you guys did enjoy this video. Let me know what you think about all this. I think this is a very interesting and informational article that we can learn a lot from, and it's definitely something that we need to take notice of, like it was mentioned earlier. So thank you guys for tuning in. I'm gonna ask you guys, please smash that like button. Let's see if we can get 150 likes on this video. If so, that'd be extremely beneficial. We're about to hit 24,000 subscribers on the channel. I cannot thank you guys enough. Anyways, this was Silver Slayer. Thank you for tuning in. I'll see you guys soon. Peace.